What's up, guys? It's me here. So I have to admit this. When it comes to investing, we're all beginners at some point. And with so much money to be made in the stock market, it's no surprise that more people are looking to get involved now more than ever before. That's why today I wanted to put together a beginner's guide to investing to hopefully answer any questions you might have about where to begin, how to choose the right investments for you, and then what you could do to maximize the chances of success. All that and more on today's episode of the Money with Me show. But before we start, if you want to grow your wealth, I would love for you to gently tap the like button down below. Doing this helps out tremendously and is a thank you for doing that. Here is a random stock, so thank you guys so much. Now let's begin. All right, so first things first. You don't need a lot of money to invest. Even just $10 a week invested consistently over a long period of time can turn into a lot of money. For example, if you were to invest $10 a week since 2008, you would have around $38,000 set aside for retirement. On top of that, don't feel like you have to put all of your money into one investment. Diversification is key. Think stocks, ETFs, real estate, or even crypto if you want. Just make sure you spread out your investments so that if one goes down, your others could potentially make up for it. Second, focus on the long term. Don't try and chase short-term profits or jump on the latest hyped-up trend. Instead, look for investments that have a history of solid growth and that you believe in for the long run. Otherwise, you're basically gambling, and that's not really investing. Third, start with a beginner-friendly platform like Robinhood, Fidelity, or Vanguard. These platforms are easy to use, have a wide range of investments to choose from, and are commission-free. So you can buy and sell without paying any extra charges. And finally, avoid common mistakes. Don't let your emotions get the best of you. If you're feeling scared, don't sell. If you're feeling greedy, don't buy. Stick to your plan and don't make impulsive decisions. Also, keep an eye on fees. They can eat into your profits, so make sure you understand what you're repaying and how it affects your returns. Now, in terms of what to actually invest in, there's a lot of options to choose from. Stocks, bonds, ETFs, mutual funds, the list goes on. But for beginners, I recommend starting with a broad market index fund like the S&P 500. This fund tracks the 500 largest companies in the U.S. and has historically returned around 10.5% annually. So by investing in this, you'll be able to participate in the overall growth of the U.S. economy without having to pick individual stocks. Another option is a target date fund. This type of fund automatically adjusts its asset allocation based on your age and retirement goals. So it's a good option if you're not sure where to start or how to manage your investments. But let's be honest, investing can be intimidating, and even with the best research, there's no guarantee that you won't lose money. That's why I always recommend having a diverse portfolio with a mix of assets that can help you stay on track financially. For example, if you're looking for an easy way to invest in the stock market and you want a hands-off approach, then consider using a robo-advisor. A robo-advisor is an online-based investment service that uses algorithms and computer models to create and maintain a diversified investment portfolio for you. They'll ask you a series of questions about your financial situation, goals and risk tolerance, and then use that information to build a custom portfolio for you. Some popular options include Betterment, Wealthfront, and Charles Schwab. If you're looking for something a little more personalized and you want to work with an actual human being, then consider working with a financial advisor. A financial advisor is a professional who can help you create a comprehensive financial plan that includes investing, retirement planning, estate planning, and more. However, keep in mind that financial advisors typically charge a fee for their services, and it's important to find someone who is trustworthy and has your best interests in heart. Alternatively, you could also look into real estate investing. Real estate can be a great way to build wealth because it has a tangible asset that can generate income. You can invest in rental properties, house flipping, or even real estate investment trusts or REITs, which allow you to invest in real estate without having to manage any properties yourself. And then finally, we got crypto. Cryptocurrencies like Bitcoin and Ethereum have been all the rage lately, and they can be a good addition to a well-balanced portfolio. However, it is important to keep in mind that crypto is a highly volatile investment, so only invest what you can afford to lose and be prepared for wild price swings. So there you have it, a beginner's guide to investing. Hopefully this video was helpful and gave you some ideas on where to start. Remember that investing is a long-term game and that the most important thing is to start early and invest consistently. Thank you guys so much for watching, and until next time.